Where do you see the market going? I mean, you said to me before that you thought interest rates are, they're trickling down. They're going to get down this year. Do you think we'll get mortgage rates into the mid fives this year?
I'm thinking we will get somewhere around 5.75, or at least by the end of the year.
So 5 and
3 or 4, yeah, which would be great, right? 5.5 would be super ideal. I don't know if we'll ever see those 4s or 3s for a little while, but if Trump has his way, he'll keep buying that 10-year treasury and we'll get those rates down.
Right.
But we need different things to happen. Obviously, the appetite for our debt is not out there,
right,
in the world.
But the thing is, if we do see rates that low, we see millions of new people who can afford a house. So we're talking a lot about the potential for prices to increase, which I think is very, very possible.
Yes.
Okay. Even if we have an overall recession, that doesn't mean we have a housing recession, right? There can be an economic recession without a housing recession where house prices can still go up. But one thing that few people talk about, everybody's speculating on housing prices, but they don't talk much about rents.
Yes.
And the point is, people need to buy, rent, or be homeless, right? I mean, say, for example, that case doesn't happen. Like if that's your base case, the prices are going up. I think it's happening. Yeah. There's upward pressure on rents too. What do you think about rent?
It'll continue to push rents up, right? Because people can't afford housing. They got to live somewhere. So rents will naturally increase with that. I mean, great for us being landlords, right? That'll continue to go up over time. It needs to, because our insurance costs are going up, real estate taxes are going up, and all these other costs, utility costs for people are going up too. So if the rates don't go down, then we're going to be pretty stable, maybe price-wise. If we stay along where, if prices, or if rates went 8, then we'd be looking at housing recession potentially.
Right. Yeah, I agree. That would definitely have a downward impact. I mean, talk about demand destruction. So if we had mortgage rates of 8, we would see housing prices fall. It's unlikely that we'll see those. I mean, we did bump up against those rates somewhat recently, but there was so little inventory that the prices still kept going up, right? But what happens to rents in that case? I mean, if people can't buy, they have to rent.
They have to.
Population's still increasing. There's tons of pent-up demand.
They're still going to go up, rents, right? Yeah. To me, I think both ways rents end up going up.
Right.
Rents generally will go down if there's a major economic depression, right? If we like the financial crisis, 2008, rents dropped.
But I argue that the rents dropped slightly during that. It wasn't huge, but that was because of government distortion.
Correct.
Now, there may be government distortion. Again, we just don't know. But the whole vibe in that 2008 election, Obama and McCain were both saying, oh, we got to keep people in their houses.
Yes.
And so they wouldn't allow price discovery to happen. And you had a school teacher on a, relatively low income living in a $900,000 house in Calabasas, California. Like, it was absurd.
It was.
He or she should have never qualified for that mortgage. So Ninja, no income verification. Yeah. But keep people in their houses is fine as long as that's a house they deserve to be in.
Yes.
And that's the distortion that happened. And that's why rent didn't go up.
No, that was a major problem. Yeah, right. They didn't go down, like you said, really that much. And that was when I was picking up a lot of back REO. It was really, really cheap. And then turning them into rentals. And that was a great time to be doing that. So, because they really cash flow and rates were really low at that point. So with that, and then I built up this portfolio and then I ended up selling it and then I buy more and I do the same. And now I'm in the process again, because as we're talking about here, I think rates are going to go down. So I'm buying more to hold. I want to have more rentals. But these rentals, I think I will hold for a long period of time. And if rates go down, I'll just refinance them.
When did you start real estate investing? What year?
2001.
Okay.
Into 2000.
So 2001, that was a crazy time.
It was.
Yeah.
I mean,
the dot-com bubble had just happened, 9/11 happened, and interest rates were coming down quick and prices started to skyrocket. But during the Great Recession, now we're looking at 2008, right? You were buying. Paul, you had to have a lot of confidence to buy at that time. Tell me about that mentality.
Let me tell you what the banks did at this point, because this was really interesting. I buy pretty much exclusively bank-owned properties. I was buying them off HUD Home Store.
Yep.
And there were properties listed for $230,000 that I was getting for $90,000
Wow.
And I was wholesaling to investors for $155, $160. So there was a big disparity.
So $290 that an investor would buy for $160.
Yes.
Okay.
Yeah. And it was a good return for them. They did a fix and flip where they bought it and kept it as a rental. So there was great opportunities like that where they were just willing to take such a haircut to get away because they knew there was so much inventory.
Right.
They had such shadow inventory.
Right. Okay. So I'm glad you said that. So that was an era during the Great Recession of shadow inventory. And there was a lot of talk back then in the media about don't release this inventory too quick, slow it down so you don't tank the market. That was done to some extent. But right now, what we have is we have shadow demand,
Yes.
not shadow inventory. We have a different problem now, which is an opportunity, I'd say, for investors. But yeah, talk about that.
I agree. There's just huge opportunity. And again, rates come down here. That's going to cause another potential builder's boom too, right? Because the builders need the rates to be lower so they can afford the holding costs while they're building here. So that's another potential thing for investors here too with the potential building boom. But you need rates low. And everything's rate dependent. Trump knows that, right? He knows he wants to get rates as low as they can. So this opportunity comes and we got to be ready to jump on it as investors for sure.
Yeah. Okay. Well, I want to talk about the confidence you have to invest when most people are saying don't invest. Okay. Talk about that for a minute. Then I want to talk about some Trump policies that are interesting.
So for me, it was really, really simple. When I was looking at buying these properties and what I could purchase them for was way cheaper than anything else that is sold, say, the last 90 days on Zillow or on the MLS. If I'm getting them substantially below that, I'm extraordinarily confident.
But the thing is, though, during the Great Recession,
you're thinking long-term.
Prices dropped 20%, right? And some people are thinking, all the news is everything is negative, bottoming out. It's going to be way worse. There was so many articles. I mean, if you listen to Peter Schiffrak and you think things are bad now, it's going to get way worse. The dollar is going to collapse. The economy is going to collapse. I kind of look at people right now listening to these doomers and they're thinking things are going to crash. And I just don't see how that really a real crash happens with such low inventory.
I'm with you 100%. And listen, Warren Buffett said, buy when there's blood in the streets, right?
Yeah.
And
there's not really blood in the streets now. There was during the Great Recession.
There was then, and there was great opportunity though. You figure, look, when you're picking up properties cheaper than what you could build a house for, I mean, it's a no-brainer to me. I would have held them all as rentals if I couldn't do anything else with them. But so it was great opportunity. You do have to have some foresight for it, but being through cycles, growing up in the 80s, 70s, 80s, and that high rates, 18% mortgage rates, we weren't having that. We were more like 7, 8%. Our typical average is 8% historically in the country mortgage rate. So we're still below that, which is great. So we had shadow inventory then. Now we have shadow demand, and interest rates drop. That shadow demand comes out and it pushes that inventory even lower, which means, again, you have a housing issue. Prices are going to go up. And now we got a supply issue again, right? And we got how many people in this country that need houses? How many are we short right now? How many units are we short?
Well, it depends whose estimate you believe. It's anywhere from 1.5 million to 8 million houses short. That's what they say. And they say this housing shortage, there's really no way it can be cured before 2032.
Wow.